This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Tuesday, February 10th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here at March corn up 1.5 pennies at 4.30 1/4. March soybeans were up 4 at 11.14 3/4. And March Chicago wheat was unchanged overnight at 5.28 3/4. No export sales announcements here this morning. We are through 6 of the 19 settlements for the spring crop insurance discovery period. Corn is now averaging 4.57. That's down 1 penny from yesterday, or for the previous day, I should say. Soybeans are 10.88, and that was up 1 penny. So 6 of 19 is where we're through there. I think it's a little over 30% done, so we're going pretty quick. What we know here this morning, guys, we're going to have a USDA report out at 11 o'clock Central. By all estimations, not generally a real big market mover, but we'll still take a look there. And then, Justin, we'll kick it off with you, but China was back in for beans yesterday. Soybean market continues to show strength. Certainly, bean oil yesterday was impressive, carving out new highs. So I guess maybe share a few thoughts here, and we'll throw it around the room.
Yeah, thanks, Dan. I think, the bean complex is probably the most exciting. Obviously it's hard to, know what, China's actually going to buy or what those conversations actually were. But so far to, ignore it has been the wrong move. It seems like when he decides he's going to make something happen, it happens in the ag complex. So hate to poo-poo it. I think that was the first reaction. But obviously we've recovered since then and made new highs. So soybean oil, Dustin put in the letter yesterday, I believe, but oil shares, rocking again. Still waiting for some more guidance there. So, I'd say the potential in the bean complex is the highest. It's hard to, in my opinion, hard to find a bullish story in corn right now. Most bullish thing would be that we decide to fight for acres this spring. So that's, like you said, we're within a dime or so of last year's crop insurance price in corn. I think we're a little above it in beans. So we're all going to be talking about acres here pretty soon. And I think that's where the bullishness could be in the corn market if we did have something. It's just a natural, which we've talked about a lot, just a natural rotation out of corn into beans with the big acres we had last year. So if you had a bean story, I think the new crop corn market could get a little excited to try to make sure it keeps enough acres.
Yeah, Dustin, what's on your mind?
Yeah, same thing. I mean, every day that ticks by, we have more of the insurance price established. So my comfort level for risk goes up because we know that these higher end policies will have low deductibles and some form of coverage that we didn't have before in addition to Farm Bill. So I think measuring that's important. Old crop is still the risk. I think going to the end of this month, old crop corn is my biggest concern. You just talk about volumes, right? So many more bushels than we've ever had before, and a low price that growers are generally not happy to see. So what happens in that case? It's bushels may be moving, but we're still seeing the paper long held at the delivery point, which is basis only contracts, and that is just a ticking clock until we get to the time frame where they have to sell a roll. I don't know that that's going to be the case at the end of the month. That's just my suspicion. And so that's, and I also think that you just think about all the things that you have had for coverage this year: Farm Bill, crop insurance, bridge payments, all those are largely known at this point, right? Crop insurance is known, bridge payments are known. Farm Bill is probably 60% established by now, the marketing year average, that is 50 to 60% for corn. So it all comes down to like there's very little protections for old crop corn at this point. And therefore a 10% drop in price, a 40-cent drop would be devastating for someone that's holding on to the majority of their crop unsold right now. Whereas new crop, not so worried about it, right? We have a portion of that insurance established. We know Farm Bill is active for that year. That Olympic average is still 442 for next year. The potential for another round of payments is there for the next year if prices get really weak. If let's say China does not fulfill its obligations and we go right back into some sort of a quasi trade war, I think there's potential for more payments coming directly to farmers. So you just got to go with the balance of where your risk is. And I still argue it's old crop, and that goes beyond my fundamental conviction that we may have too much supply anyway.
It'll be interesting too. You guys think that bridge payments end of February are gonna, play into that as well? They get paid and you're going into first notice day. Like, how's that going to affect it in your opinion?
Yeah, I think it may get people more likely to roll. Some people more likely to roll than not, just because but it's not that much money, right? It's $44 an acre for corn. I mean, we're talking about $1,100 an acre costs for a lot of these growers. So, bridge payment is more of a band-aid. You almost can't even call it a band-aid. A lot of people are looking at $150 an acre losses this year. There's still a lot of revenue that needs to be made just to pay for last year's inputs.
That's a good point. Ben, what are you thinking about today?
I just thought I would we've mentioned for probably 10 days on here that we think there's a lot of basis contracts. And I think if you look back over the last few months, we had a rally starting in October where we took out our kind of previous highs from our September bounce. People were hauling recency bias last year. We continued to rally. So there was probably quite a few that were on the December contract. And then because of demand, you were able to roll it pretty cheaply. I think 7 or 8 cents would be a pretty fair spot of where it was rolled. And then there was definitely a proclivity to believe that yields had to come down. I don't think anyone really considered that we would increase harvested acres by 1.3 million. So then you had bushels delivered all the way up through early January and a lot on basis. So, you're getting to a point where you've probably accumulated a lot across the country. And I think it's a tremendous risk. And it goes back to when you're making the decisions, is it better for you if you want to be long to roll it or sell it on a call? And, I don't think either one has been a great play, obviously, but if you look back, it probably would have been better off to sell it whenever you did it. I am concerned for the end of the month. I hope I'm wrong. I think it's a fairly well publicized trade, which always makes you nervous. But this is also the time of the year where the producers are going to have to generate more cash. So I think that's how we got here. I don't think it's one of those things where you can go, it was a complete bonehead move to do something like that because of what we were looking at. But now if you've rolled it twice and you price, you're essentially selling the lows in December against a December contract just about. So I just wanted to put that in perspective.
I think it's a good point. Dustin, we've talked a number of times. We're getting to that, like I said, just a little over 30% in terms of the crop insurance price being established. Now's no better time to take a look and start doing some analysis on what you should be selecting and how that's going to be that first baseline for your marketing as we start the year. Any thoughts there?
Yeah, absolutely. I mean, I think, getting a plan in place ahead of time is always the best idea. I think it helps make way better decisions on your plan A marketing, which is, trying to sell profitably. And I think there's a lot of concern that we're just in this perpetual bear market right now. And that I've heard a lot of this directly, which is, I just got to sell, right? I just need to be short going into the year. And when you value that against their cost structures, it's like, okay, well, we can do that. We may end up locking ourselves into $100 an acre loss though. if we sell too much, right? Because we're starting off in the red, and small yield reductions on the personal level could easily take us even more red if the price ends up going up this summer. We don't know what summer weather is going to be yet. Generally, we have time to sell, right? June is your 20-year seasonal highs mid-June for a new crop corn contract, for example. But I get the concern, right? We have maybe 2.5 billion bushels of carry-in and a desire to plant corn next year. So, like, what's going to get us out of this, like, perpetually large stocks supply? I get the bearish sentiment for sure and the idea to sell. But whenever things have looked most bearish, I mean, I think mid-2020, it couldn't look more bearish, and the price doubled within a year. The narrative can change pretty quickly. And so when I say making better decisions for plan A, plan B is high crop insurance coverage, low deductibles. If you can get down to a 5% deductible, especially if you can do things on the private insurance side that connect it better to you, or maybe you stack insurance on top of it in various ways. We got a million things we can do for insurance, but like just insulating yourself to low losses to start the year can buy you that time to go look for the better opportunities for plan A and play to that seasonal. And that's my opinion, at least, of how we should play this. Especially when you're coming from negative margins. I think panic and overreacting by getting way too short early on in the season, it could be the right thing to do, but it also could kind of be a really poor mistake, because that's not what the average grower is going to probably do in the end. And if you're the one guy that's sold in the mid 4s and it does give you a chance to sell above 5 to get to profitability, it's just going to be real heartache at that point. Not saying that's what's going to happen. I'm just saying we think we have time and measurement once we have plan Bs in place.
No, very good.
Actually, Dustin, I was talking to a buddy who is in the insurance space, not crop insurance, but other insurance, and explained crop insurance to him and like like how much coverage you can get for relatively low price. And he was shocked at it, compared to the other, just because it's subsidized so heavy. So to your point, one of the problems, if you get just aggressively sold early, you're basically triple short. I mean, if you have a big crop insurance policy and you're hedged and you have PLC, so a lot of times it's more risky to be sold than not sold aggressively, because if you rally, you actually lose money, first. So I just think, to your point, I just think it's super important to realize where all these things kick in together.
Yeah, no, that's a fantastic point, Justin. I was going to say, I mean, we're using our software to illustrate all these things we're visiting about, so give us a call. We can go through your scenario with you and just be sure that, none of these pieces, no stones left unturned. I mean, that's what we're doing. So reach out, give us a call if you've got any questions. This stuff is hard. You got to work through it, but it's going to ultimately be one of the biggest decisions you make to start the year. So don't shortchange it by any means. Real quick here, we'll move over to livestock. Rye, cash is king in cattle markets, and it was interesting to see some of that liquidation in the front end of hogs yesterday. What are your thoughts here?
Yeah, no, overall, just kind of, the Argentinian beef news wasn't too big of a deal, right? I mean, we did see a little bit of caution, though. We did see open interest down over 1,000 contracts in both live cattle and feeders. So it does seem like we're running into that point where it's like, man, if things level out here, what's going to happen? I mean, we did verify all-time highs in cash yesterday for Texas and Kansas. So there really just hasn't been any major kind of setback, but we are just in that seasonal time frame where sometimes you can see carcass and cash prices start to see a little bit of pressure here. It feels like we're in that seasonal lull. So would expect to see a little bit kind of a choppy trade overall, and we are seeing that in the beef. Choice was down 157 at 367.76, and select up 82 at 365.35. So it seems like you got a little bit of a push and pull. We haven't seen any cash yet to start here this week. I think everybody wants to see at least kind of a steady, maybe a steady firm trade, but we'll see if we can see the northern sectors get pulled up here as well. Also, we are in delivery for February, and no deliveries were posted. Oldest long from April 8th of last year when the market was trading 192 to 195. So congratulations to whoever that was, riding that one out. So
Not a quitter.
I mean, definitely hodling. So that's pretty awesome. Nice $40 win there. And then on the hog side, yeah, a little bit of pressure, a little bit of liquidation. I mean, the market is incredibly overbought. I mean, no question about it. Seasonally, we do kind of enter that lull. Just same thing in the beef market. We should see a little bit more of a sideways trade here. Typically, this time of year, bellies are going to lead the charge. We are seeing that same kind of thing play out. Bellies were up $4.30. So I think the board's kind of captured a big portion of this optimism. You've had these big premiums in the back end of the market. So overall, just the profitability prospects are really high as we get into the summer. So there's just maybe taking a little bit of margin off the table, as they say. Not a bad idea, but overall, we are still kind of running into some of those technical support levels. April closing below the 10-day yesterday, not a great sign, but also the 20-day has been a big average to kind of test from a support standpoint. So I think that that's kind of where we're headed overall right now, and hopefully just bounce right off that. So that's all I got.
Very good. Appreciate the update there. We just came into the open. We got March corn now up a penny and 3/4, 4.30 1/4 is the last. March soybeans are up 5 at 11.15 3/4, and March Chicago wheat is up 3/4 at 5.29 1/2. USDA report will be out at 11. We will have a premium video out here today with our thoughts and comments on the USDA release there. So be sure to check that out for those premium subscribers. If you see the link in the comment section, that is to the War Room Report. That is where that premium content resides. It will be available to those that subscribe. We've got deeper dive into the markets, some of the things that we talk about on the War Room every morning. We take a deeper dive in there. It comes out 7 o'clock every morning, keeps you up to speed on all the news and headlines. So be sure to check that out. Also, 10% of those subscription fees go to the AgYield NextGen Foundation, supporting the next generation of ag leaders through our national scholarship competition, which you certainly need to check out as well. It's very good deal there. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and subscribe. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content. All for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield NextGen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.